morning, the COT data video for the week beginning the 7th of October 2024. We saw a big move on the dollar, and it's very likely to do with the Fed funds rate. And what happened is that it was pretty much 50-50 on the next interest rate cut, and it's actually really now been penciled in that they're going to have a 25 basis point cut. So that's aided the dollar strength. A larger cut would weaken the USD. A smaller cut isn't that bad. Okay, so in case you're wondering about the dollar, so we're going to have a look at the COT data now. But just a quick reminder on the COT report. When you click that, you'll get the download link. What you need to do is right-click it, Properties, Unblock, Apply, OK. All right. If you don't unblock it, it blocks the macros. And you need the macros. So there's the dollar. It moved quite strongly, okay? And we'll look at the QDB scores alongside the Excel. So we've unblocked it so we can double click it. And so this is basically important that you unblock it, basically. This is just a quick tip there. And so we should see some dollar strength by the COT data, but we'll have to wait and see. So enable content, we can maximize that, and then we're going to come left. We're going to come to the chart page here, and so a slight decrease in the dollar. So that's off note. We are just about positive. Yeah, we are still trading above zero. Okay, very close. So right click, move chart, new sheet, and we'll just call it net non-coms because that's what it is. We could also look at the commercials and the hedge funds, but we just simplify it a little bit by looking at the non-coms, the net non-coms. Like I say, we are just about positive. The euro moved quite strongly south, 71,000 to 55,000. So what we can do, and so we can see there's quite a lot of things neck and neck. The Kiwis, the weakest of the bunch in this area, and of course we've got a weak yen, which you would have seen in the FX market, and we are seeing a resurgence on the USD. It was negative last week, so we have pumped quite a bit. So that's the Euro USD, right? So that's that. Let's look at the yen, and we'll have to see how we go. Yen ticked down as well. Yeah, 56,000 from 60,000. So the euro yen will be tricky this week for sure because of that. They're selling both. In fact, they're selling the dollar as well. So it could be quite a tricky euro USD and the euro yen combination. Let's look at Aussie. So we take the euro off. Remember that the euro had been sold fairly strongly. Okay, Aussie on. Aussie is now going quite higher, 14,000 from minus 40,000, so it's a big increase on the Aussie. So that's off note. So Aussie USD cross. So on a COT data perspective, that would be AU buy. But of course, with the Australian dollar, we have to remember the risk on, risk off fundamentals with the currency, because we've got a load of things going on in the world. Currently, especially in the Middle East, and we've also got the Russia-Ukraine that's ongoing as well. But the Middle East is definitely has potential to worsen, and there's also talk about stopping oil as well, and the oil price is probably going to skyrocket, and that's going to cause quite a risk-off event. And it's also going to hurt inflation expectations with a stronger oil as well, and the Fed are trying desperately to get the inflation down. So it could be like a hot pot for more risk off. It could be like a deadly cocktail, really. And we'll just have to see. So just be careful with the Australian dollar. So it's just a quick one on that. Even though it's surged, we still have to be quite careful because it should perform well on a risk-on environment. And even though the geopolitics, the S&P and the Dow, they still rallied anyway, so it could be a good one to do. Aussie's got a 9 score, the USD's got a 10 score. So we could do You could wait for that to weaken slightly, and that could stay where it is, if not strengthen, and then that would be a good Aussie USD long. Okay, so you're waiting for that to weaken. If it does, okay, it may well do. We have to wait and see. So Aussie of pound on. Pound had been very whipsaw last week. We had comments from the central bank, and it sent pound down a lot, very strongly, and then up. So Bailey sent it down, and then Pill sent it up. So it was basically raiding stops very strongly, and we can see we're consolidating in this range as well. We are making a W pattern, which can lead to like a sell-off, but we'd want to break that low, and they are going slightly long pound. Okay, so they're short in euro, they're going long Aussie, and they're going long pound. So those permutations might be good. CAD on. CAD probably should be going up higher because of the Middle East. So minus 70,000. So they're quite bearish on the CAD. So that's that. Okay. And then gold. Gold's going to be of note. And of course, we're still pumping. Slight retracement from the high. 315 contracts. 315,000 contracts. And then against 299. So still mega strong. A tiny bit of a sell-off there. Gold off, and then New Zealand dollar, and ticked up higher just slightly, 1900. So we are slightly above the USD. So likewise with the Aussie USD long idea, you could wait for that to weaken slightly. It would have to weaken quite substantially for it to get weaker than the NZD. So I think Aussie USD would be slightly better. But if you've got patience, this could be a good one because that's indicating a long for the NU currency pair, the New Zealand dollar, US dollar. So potentially it's got legs. So one to watch, and remember to do your risk management as well. You just wouldn't trade blindly. You wouldn't just open a Kiwi USD long based on this. You'd want to make sure it comes down to support before a buy. You wouldn't want to be buying resistance and stuff like that. You need to do a bit of technical analysis. That's it. We're coming to the end of the video. Swiss franc, and that's the last one. And we are kind of consolidating, aren't we, within that range? Almost halfway between that high and that low, and we're sitting at minus 22,000. So just a quick one on the bot. We had a really good week. It didn't open that many trades on the QDB bot. But it's okay. It's okay. We did fine. The week prior was quite poor, but you probably would have seen the Euro USD whipsaw. So we made 89 pips last week, but we were down 200 pips the week prior, and it was just kind of bad timing. We launched the bot in a very turbulent week with the Euro USD, and you just worth noting that it trades the Euro USD only, and it uses Twitter API sentiment for the trigger. Okay, so just a quick update on the bot. If you're interested, you might not be, and the link for this bot is in this YouTube video. And that's it. So I wish you a great weekend. Thanks to Christian for doing the video for us, the report, the data even, and keep an eye on that USD. Fundamentally, we could be quite strong if we look at that CME FedWatch tool, but if we can continue to be risk on with the S&P going to all-time high and going up higher and higher, then that probably could weaken. And we also know that we probably should be fairly risk on because of that. The herd are still very short indices generally. All right, so 17 bears versus the one retail bull. So there's a lot of bears still in the equation. And that's it. So a great weekend, and I'll speak to you guys soon.